Jim Simons earned his PhD in mathematics at just 23 from UC Berkeley, specializing in differential geometry. His groundbreaking work on minimal surfaces and geometric measure theory positioned him as a rising star in academia. By 1964, he was teaching at MIT and Harvard, collaborating with luminaries like Xing-Shen Chern. This academic foundation would later underpin his financial algorithms. During the Vietnam War, Simons joined the Institute for Defense Analyses, IDA, applying his mathematical genius to crack Soviet codes. His team developed classified algorithms for the NSA, but his opposition to the war led to his dismissal in 1968. This experience exposed him to pattern recognition, a skill he'd later apply to markets. Simons revitalized Stony Brook University's math department as chairman in the 1970s, recruiting top talent. Here, he co-discovered the Chern-Simons invariants, equations now fundamental to string theory. His academic work proved that abstract math could solve real-world problems, foreshadowing his financial pivot. And Simons began viewing markets as systems governed by mathematical patterns. In 1978, he hypothesized that price movements weren't random, but could be decoded using geometry and statistics. This insight challenged Wall Street's traditional reliance on human intuition, setting the stage for algorithmic trading. Simons founded Monemetrics in 1978, trading currencies using early algorithms. With no Wall Street experience, he relied on mathematicians and physicists. Initial results were mixed. His models struggled with market noise, but failures refined his approach. This trial phase was critical to Renaissance technology's later success. By 1982, Simons abandoned traditional trading models, focusing instead on pure data analysis. He mined historical prices for statistical anomalies, avoiding economic theories. This shift mirrored his academic rigor. Let the data speak. Renaissance Technologies was born, with the Medallion Fund as its testing ground. Simons famously hired physicists, cryptographers, and astronomers, not MBAs. His team included Nobel laureates like James Axe. They treated markets as chaotic systems, applying signal processing techniques from their fields. By 1988, this unconventional approach yielded the Medallion Fund's first 30% return. From 1988 to 2018, the Medallion Fund averaged 66% annual returns before fees, dwarfing the S&P 500's 10%. Simons' team exploited millisecond inefficiencies using hidden Markov models. The fund's secrecy and exclusivity, it's only for employees, fueled Wall Street's fascination with quantitative finance. Simons donated billions to science, including $500 million to Stony Brook in 2023. His foundation funded autism research, quantum physics, and math for America. Unlike his secretive hedge fund, his philanthropy was transparent, aiming to solve unsexy but important problems, reflecting his academic roots. Simons proved that mathematics could outperform human traders, inspiring a generation of quant funds. By his death in 2024, Renaissance managed $165 billion, and 6 of the top 10 hedge funds used his strategies. His life bridged Chern-Simons theory and the Medallion Fund, showing how abstract math shapes reality.